This video is going to discuss scalping methods, and I'm also going to give an emphasis on using pivot points, Fibonacci areas, and also our range charts. So here's a 5-minute chart with the euro with the daily pivots on it. And typically the pivot is very similar to the hourly moving average in that we use it as a filter. Above the pivot we tend to buy, below the pivot we tend to sell. And remember, the midpoint above and below the pivot tends to be a choppy area. Once the price breaks through the midpoint here or the midpoint here, it tends to trend, and it tends to be choppy in between here. So, if it's underneath the pivot, you want to sell. It's likely to find some support here, resistance here. You might have sold, had a small loss, got short again here, out, short again here. And once again it breaks through the midpoint above or below it, you tend to get trends. Let me just pick a few charts randomly and show you that. Chop zone, once it gets underneath here, it went to the next pivot. It was quite a bit choppy in here, and then finally, when it broke underneath that midpoint, it fell the rest of the day. It doesn't always lead to trends, but you can see it does often do that. Let's scroll this one back and look at the previous day. The chop zone, once it's above this, it tends to be more likely to trend. You buy every little pullback. For instance, right here, you might have got out of there with a small profit, big profit, small profit, small profit, small profit, big 40 to 80, 40 pip profit. Nice. When you're scalping, it's also very key to know where all the other support resistance areas are. First of all, I'm going to add our new pivot score that shows you the daily, weekly, and monthly trends. And it also measures the intensity of the trends, and it works not only live but also historically. So this one, you can see the pound dollar pretty much was in a downtrend since last night right here. So you're looking for sells, 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 sells. And this one, when it busted through the pivot right here, maybe some of the other ones also did the same, and it changed slightly to an uptrend, but then it quickly went back into a downtrend, and it went down the entire day. Keep in mind the weekly trend's up and the monthly trend is up, although during this time right here it kind of got light. So basically, if you see a certain area where the weekly monthly trend looks like it's about to flip to red, later in the day, if it breaks down again, it's very safe to assume that that's going to also happen again. It didn't occur until about right here, but once you see a certain area get hit before, if it breaks down into that same area, that's the benefit of seeing previous bars on here. I wouldn't want to scalp without seeing the real-time momentum. So you want to add the FX Trend Pro, and this really works on a 5-minute chart. You want to use the FX Build a Trend tool on range charts or tick charts. And you also want to add some support resistance areas such as the daily moving averages, very key. I have a lot of scripts in here I use to test. And you also want to have the previous days, weeks, and months high and low. And it's always good to know where the monthly pivots are. I like to make them 60% width, and then the weekly pivots at 30% width, because these make very high probability profit targets, and if they line up with any other area on your chart, in other words, the monthly pivots right near S2, most days S2 and R2 tend to be the lows and the highs of the day. So this was a very high probability profit target. It actually went a little bit lower, found support at the 200-day moving average. So it's up to you. The more lines on the chart, and to some people, confuses things more, but they also are key support resistance areas. If it breaks the previous day's low in the weekly pivot right here, which it found support at earlier, if you didn't have these on your chart, you might not know why it just stopped there. Breaking through these levels is very significant. Here's your next profit target level. It's only 10 pips down, but if it breaks that, then it's likely to go another 20 pips. So I would have, if I had sold somewhere up in here or this breakdown, usually I don't sell the lows unless the market comes down to them and goes sideways for at least 15 to 25 minutes. I wouldn't sell this, I'd be more apt to, especially since this has a daily trend that's pretty much down all day, I would have looked to get short right here because it's underneath the pivot. That's in my zone for looking for sells. The weekly monthly trend do concern me. I wouldn't have gone super big position size here, but once it breaks down here, here's my first profit target. If it shoots through there, I'm going to probably get out of my whole trade right here. I wouldn't, myself personally, knowing myself, I wouldn't have been in this for this extra 30 or 40 pips down, but I would have had a really nice trade regardless. All right, so to keep things simple, I'm just going to show a 5-minute chart with all these things on there, and I'm also going to show the range chart with just the daily pivots on it. It's everyone should find a method that makes sense to them and that isn't too complicated for them to be able to process. Keep in mind, you're not going to just trade one currency. And I just noticed that this is the pound and my range chart has the euro on it. So I will change this to a pound. Okay, so here's the range chart with this. And in a lot of ways it is a cleaner chart. And there's certain patterns that you can find for scalping. One, if you were looking to buy this for whatever reason, first of all, it's underneath the pivot, it's more likely to go down, but it did go up to this resistance area here, and again here, and you can see rectangle shaped patterns. They tend to be pretty high probability. You could buy this breakout. As far as the scalp goes, you're looking for 10 to 20 pips most of the time. You're going to buy the breakout here with your stop right underneath the lows, and so you're risking 10 or 12 pips. Your profit target is right here at the 1.382. You have a pivot level here too, and it's a half number 3. Resistance area is right there. So if it went up and went sideways, I would definitely get out of half the trade there, but it didn't. It kept going up. And most of the time I will exit at the 1.618. And so I would have probably exited half the trade there. And when I'm scalping using range charts, I tend to move my stop up. So my initial stop would have been right underneath the low, maybe somewhere around here. As it starts going up, I'm out of half my trade here at this. Actually, if it would have stalled here, I would be out of half the trade. At the 1.618, I almost always exit half my trade, and then we have a nice reversal pattern. Wicks on the top of the bar tend to be reversals. Wicks on the bottom tend to reverse up. So I'm going to put my stop a pip or two underneath each bar's low once it gets above a likely reversal area. Very rarely do markets go above the 1.618, and when they do, usually the 2.0 is the maximum distance they move. There's a couple patterns you can look for to take trades off of range charts that I really like. One is the rectangle pattern that you see here, and the second one is once you see a nice size move, you look for a pullback the other way between 3 to 5 bars, and it can be 7 or 8 bars as long as it doesn't go back above the previous swing high right here. And the first bar that turns red, you just simply enter when it goes 1 pip below the low, which would be right here. So you have 1, 2, 3, 4 bars up. Here's your red bar, and your stop is just simply a pip or 2 above the high. So you're risking only 6 pips plus a pip padding plus whatever your spread is. And as this thing goes down right here and starts working its way down, you can move your stop down. You're already up 5 or 6 pips. You want to draw your fibs off the previous swing like this. And this one came down and kind of found support at the first fib target. You don't know if it's going to go sideways there and then underneath it, or hit this and explode back up. So I would, in this case, because it didn't penetrate this level like the previous example did, I'm out of this trade around 59, 10, or 11 right there. So I'm short this trade at 38, and I'll just say I'm out at 10. So I made 28 pips, and my other stop is going to be pretty much above these bars right here. Sometimes they go sideways and then they go down, and then as you can see, it continues. So at that point, I keep moving my stop down above each bar. And when it gets below the 1.618, I'm expecting it to reverse. So, and like I've told you before, rarely does it go below the 2.0 without either going sideways or reversing. So myself personally, I would have probably been out of this trade somewhere around 58.85. So a very huge 65 pip profit on half, and maybe 30 pips on the first half. And as you can see, it came down to this S2 level with almost no bounce. This is an area here that's kind of risky. I might or might not have taken the trade depending on how many pips I'm up. If I was up 30 or 40 pips on the day, I wouldn't have taken it. If I just started trading and I want to catch my first trade, I would. I would normally do a half whatever my normal size position is right here, because I hate to sell the lows. It's a very low odds trade, and I'm going to draw my fibs off the tiniest move I possibly can to get an idea where to get out. And I'm not going to be greedy. Once the market's already made a big move, I typically exit my entire trade to 1.382. So short at 58.70, out at 50, made about 20 pips on that trade. It would have been with half of a normal position size, so you could really, in actuality, look at this as only a 10 pip trade with whatever my normal size lots are. Let's look at some other examples. I'm going to put the euro dollar on here now, which is what it was when I first brought the chart up. And remember, the market tends to be choppy between the pivot and the midpoint underneath it and the midpoint above it. So just be aware of that. When it's underneath the pivot right here, it's more likely to go lower. So if you were trading earlier, you might have sold this right here. Until it breaks through here, you have to really look at the midpoint as being where it's going to stall. If you did sell this right here, it's kind of going down. You move your stop in half. It goes down again. It's finding clear support here. I probably would exit half my trade at 45, about a 20 pip profit on the first half, and I put my stop right above these little rectangle pattern here. And then it came back up to the pivot. It's kind of going sideways, and unfortunately I would have probably got jigged into this trade right here. The benefit of, when you see a resistance area like this go sideways like that, usually when it breaks out, it's going to go up. So, when it doesn't, you got to take your loss. And failed breakouts are very profitable if you can get yourself psychologically to realize it was false, flip and go the other way. Now your stop is a pip above here, and this is your first profit target. I would have got out of half my trade here just to get this previous loss back. Oops, sorry about that. Move your stop above down to here, and a lot of times it goes through one pivot level. Most of the time you're not going to make more than 2 pivot levels on any one trade. So if you draw your fibs on here, you can see also that this is right into this fib area. So if you are still in the trade, you probably want to get out of your trade right here. This is a perfect example of what I mean and why, one of the many reasons I use a range chart. Here you have a nice trend down. It's below the midpoint right here, which means it's outside the trend zone. It's in the, or I should say it's in the area where it's likely to trend. You have a 4-bar pullback right here, 1 bar down. You short it when it goes 1 pip below the low here, and your stop is a pip above the high. So in this case, it went my way, came back against me. Anytime it doesn't just immediately go my way, I tend to move my stop in half, just because, why lose 10 or 12 pips when you can lose 6 or 7 max? It came down underneath this area right here. You always have to draw your fibs on the previous swing. This is where you're looking for as a profit. More than likely, I would have moved my stop here in the first half, and I would have had a very tiny profit on the first half. I would have got out at 18, because I don't want to give back too much profit. My first stop would have been there. I would have probably moved my second stop right above the pivot area right here. And you always want to know where the fib is on the last swing too. A lot of times fibs overlap. This is very likely to be the end of the move. And so for the second, trade down, I would have got out of this trade right here at the 1.382 of that last move. It's really near the 1.618 of the other move, and it's also a pivot level. At this point, it really would have to go sideways a little bit longer before I'd sell it. But if you are going to sell the low right here, you can see that there was a 3-bar pullback right here. So technically, this is exactly similar to this. I prefer more than 3 bars, but if you're going to take a risky trade selling it near the low, as soon as it goes your way, move your stop down at least. Lose 3 or 4 pips max in these situations. If you can get out of a trade with 8 to 12 pips on the first half, move your stop down. You remember, a lot of times these things move in 3 to 5 bars. So 1, 2, 3. Maybe you get out of the second half here at 82. Not the most profitable trade in the world. Second half, you made 13 pips on. Let's look at the euro yen. Most people don't start trading until after 3, so it's above the pivot. If it came down to the pivot here and found support, you'd be looking to buy it when it goes above here. It's kind of going sideways for a little bit. I usually wait for 5 or 7 bars of rectangle patterns before I short. So again, I probably might have gone short right here at 41 with my stop above the high. And this is exactly why I cut my stop in half. If it goes my way, then immediately comes back, I usually cut my stop in half. And this is exactly the reason why. So I only lose 5 or 6 pips right here. Came up to this level. It's kind of chopping around. I might have decided to go short again here. There's nothing worse than getting short, taking a small loss, and not getting back in, and then watching it move 30 pips while you're sitting there scared to pull the trigger again. So, get short again. You can see it kind of went your way a little bit, then came back up. I'm moving my stop down just in case. And like I said before, remember, until the midpoint gets broken, you got to expect this to be a possible area. So I'm going to get out of half there. I might have made 6 pips on there. I'm going to move my second half to break even at that point. Above the pivot is more likely to go up, so you can't really short right here. A lot of times they chop around at the pivot. You're kind of waiting to see what happens. So, and when it breaks out right here, you're in. Draw your fibs on this. Here's my first fib target. If it stalled right here or just barely hit it, I would get out of half. Usually, as soon as it goes above the 1.618, any sign of a reversal, like in this bar right here, it opened, went up, came back down, I would probably be out of this trade somewhere around 71. In this trade at 54. About 16 pips. And, this is a nice size move up. So you have 1, 2, 3 bars down. Here's your first green bar. You would buy it when it went 1 pip above here. And this is exactly why you want to add a pip or 2 padding underneath the low here. You don't want to get stopped out in these situations. And it goes up again, comes down. At that point, I'm cutting my stop in half. And remember, we don't have the FX build a trend on here because I want to keep this just pure scalping, price action only type of class. You can incorporate the FX build a trend to the bottom here and increase your odds. If you see an explosive plus 80 move up, the pullback here has very little amount of weakness. You get into the trade, and as it's going up, if you don't see incredible strength going in there, you probably want to exit half your trade here and lock in 5 or 6 pips, maybe 7. Remember, it's above the pivot, so you prefer to wait for a pullback. You might have got into this trade right here, actually, and you would have had a loss. And once it's, you lost 7 or 8 pips, maybe 9 or 10. Underneath the pivot is very likely to be kind of choppy, so it's up to you whether you want to get into this. Usually I avoid currencies chopping around the pivot, and just kind of illustrating how through a series of small losses and bigger wins and losses, you can make money even during these little choppy small 15 and 20 pip moves. This is a 4-bar up move, red bar right here. It's such a powerful signal. Most of the time it's going to go your way. Comes down, comes back up. You might have got out of this trade with a small loss right here. You go short again, and then it started to trend. Notice the 3-bar pullback, 1 red bar, short right here at 94. It went all the way down to 76 right there. It's about 16 pips. And, it's a good, profitable way of trading. Anytime you see a nice little rectangle pattern here for 30 minutes to an hour, when it breaks out, it's usually pretty profitable. In this case, it only went up 10 pips, but that's more than enough to move your stop to break even, the worst case scenario. Or if you don't see much momentum, we don't have that tool running. This is kind of a dead time on a Friday. You're not going to really want to trade during this time, obviously. And for the last example, I'll put the pound yen on here. Okay, my last example using this is the pound yen. I'm going to just quickly look at the regular chart here to see what the various time frame trends were and what the pivot score looked like at various times. So at this point right here, it was in a downtrend, and it also became in a downtrend after 10 o'clock. So we'll just, because I've already done a lot today, we'll look at 10 o'clock right here. Here's 10 o'clock. The pivot score daily shifted into a downtrend right here. The midpoint, again, it tends to be very choppy in between the pivot and the upper midpoint and bottom midpoint. And you can see that's exactly what happened. Came down, went up, came down, went up, down, sideways, and then down, sideways, down. The trendy part came when it broke the midpoint here. So the 10 o'clock was also when the daily trend shifted down. But let's just take a look at this. Anytime you see at least a 5-bar rectangle pattern, 1, 2, 3, 4, 5, this barely met it. The longer it goes sideways in an up down thing like this, the better you are with the breakdown. In other words, down here near the lows, it's been going sideways for so long that a lot of times I'll anticipate and jump the gun right here with my stop right above here. As soon as it goes down, I'm expecting this possibly being support like it was. So I'm moving my stop down. I don't want to get whacked with a 10 or 12 pip loss when my profit target first profit target is only 7 or 8 pips. That doesn't make any sense. If it breaks down from there, I have my fib target from here. This is also the S2. Most of the time, S2 level is where the end of the move is. You can see short at around 55, out at 30. Nice 24 pip profit there, while risking, about 10. And that was the initial risk. As soon as the trade started going my way, I quickly moved the stop down because I had low, it wasn't the highest probability trade in the world. That's one excellent trade. And a lot of times you'll have a two-wave pullback off the low. This is another one of our systems. Watch our Elliott two-wave system. This also has 1, 2, 3, 4, 5, 6, 7, 8 bars up. First bar down. A lot of times if I see the bar not breaking this high and coming back down, I'll jump the gun myself and just sell right here at 59 because I'll have my stop at 63 plus the padding. You risk very little, and most of the time, when the market's this weak, at the very minimum, it's going to retrace 38 to 62%. So when it came down here, I'm always going to exit half my trade. I don't know if this is going to be a 1, 2, 3 low. I'm moving my second. I'll show you where my initial stop was on this. And again, this is the time of the day where you probably don't want to be trading, but out of half with a very small 6 pip profit, move my stop down above here, and if it continues down, I'd still be in it, moving my stop above either the previous bar's high or 2 bars back, depending on how many pips I'm up. The more pips I'm up, I tend to tighten my stop more.